folks, my accounts are up a whopping $20,000 just within the last week and a half alone. And in my clarity, we're going to be diving down into each one of these individual brokerage accounts, from the tax advantage to the corporate to the crypto, to give insights on my strategies managing over $360,000. And if you can appreciate that conversation in return, I simply ask that you hit that like button. And if you want to continue this conversation beyond what you see on my screen here, come join my private chat group, Thereichgang.com, with over 100 members of high net worth individuals discussing stocks, crypto, real estate, and also giving you some financial tools and spreadsheets. But remember, you can always join me here for free. Now, taking a look first and foremost at the markets, baby, we have been printing after earnings. I do not know if this is a bottom, but as I've said, cost average investing and just being diligent here is really starting to pay off. We'll see that with actually in these brokerage accounts. But look, Apple up 3% today, Amazon up 11%. That is over $100 billion in value to that market cap in a single day. Insane, right? I mean, everything's like, even the bad stocks, like at least Facebook's flat, but Google's up, Microsoft, the indexes are all over 1% basically today. Crypto's doing very, very well. So let's just get right into this and have this conversation here, folks. So my tax-free savings account, all the income in here is pretty much 100% tax-free, minus some foreign withholding tax on those US ETFs. But taking a look, guys, at a value of 155,000 with VDY, my Canadian Vanguard Dividend ETF is now in the green. We are up 0.35%, and that monthly passive income, those dividends this thing produces, I have been taking that and reinvesting it into the S&P 500 index. I do want my TFSA to see really good growth, and usually the US grows a little better than the Canadian economy from a broad-based perspective. So taking a look, VOO is now in the green. I'm up 0.77%, and then I have VYM. It's a bit of a smaller position in here, and I'm going to keep it that way because it's a little less tax efficient with that over-the-border tax, but we are down about 1% on that position within the TFSA. So taking a look at the R to the S to the P, for those of you that don't live in Canada, that is a registered retirement savings plan, perhaps a little similar to a 401k, give or take. But what I've done in here is I've really loaded up, for those of you that aren't, or for those of you that are new, I mean, I really dumped a lot of money into VYM, so that's the Vanguard US Dividend ETF. And the reason I did that, because the RSP waives the withholding tax. So currently I have $35,397, taking full advantage of compounding dividend growth by just kind of reinvesting that. But I'm down 2.52% on that in here, with a little hint of VOO at about 1.83% down. It's about a 12K position, right? 35K in VYM. And then finally, the managed account within these few brokerage accounts. Then we'll take a look at the corporate account, and then along with my crypto, I have a lot of REITs in here. And a lot of you guys have been asking me, why do I hold REITs in a regular account? REITs are so tax inefficient. They're taxed at regular income rates. There's no discounts. Why aren't they in your tax advantage accounts? And that's because I want access to monthly income at the drop of a dime. And what I do here is I have utilized these dividends, but ideally I just let them build up, and then I take that money, and to deduct the taxes, I use that to fund my RSP every year. There's a lot of ways to avoid paying tax, baby. I mean, there's a lot of fun ways. Just call me Jerome Powell, because damn it, I mean, I just be the printer, baby. This is such a good little setup for me. So I've got only monthly paying stocks in here with the broader index of DY. My smart centers in Ryokan. Now, I'm down on smart centers, but I really think, you know, a lot of us were trying to short the real estate market. I talked about this in a video. There's a lot of inverse ETFs that basically track like the Canadian real estate market, and a lot of people were shorting it. And I started telling you guys a couple weeks ago that it's probably time to start buying these, because even though the market value in real estate here is dropping, all the supply and demand metrics haven't changed. It's just the demand has shifted over to the rental market while they wait to surpass this tumultuous time in the interest raising environment. So the rental market is exploding. So it's a double-edged sword, because that means REITs are losing value on the actual real estate, but because they're rental income focused, that rent should be going up, which will bode better for dividends and bottom line income. So I love my REITs, and I'll probably continue to add them periodically here and there, but nonetheless, those are those three accounts. So the corporate account, let's get into this, because this is the newest account, probably more reminiscent to people that have been in the market for the last year and a half, 2 years, because this account I think is barely a year old at this point, maybe just getting there, but it's worth $81,556 going into this tumultuous crash back in February, when I liquidated my Facebook, my Google, my tech positions, and I decided to repivot into security companies that I knew wouldn't get hit as hard as boded extremely well, and I'm beginning to pivot yet again. But so far, this account's only down about $1,800 since the pivot, and we can see I hold a huge percentage of VDY in here, again, just trying to generate monthly cash flow, a little tax inefficient. You know, passive income and corporations get taxed at a higher rate, but I do like having that because it covers some of the corporate tax expenses. Again, just trying to generate that passive income. But from the growth perspective, which is what I want this account to be primarily focused on, I did start buying back Google by selling VYM, which is so far out of the positions is the worst worst performance since I bought it. But again, when we're talking about how much Facebook and some of these companies have dropped when I sold them a few months prior, I've definitely saved thousands of dollars in losses. So VYM is so tax inefficient. I lose like almost half of the dividend income. I do not want that kind of exposure in here. Again, just for security, because I don't like being out of the market holding cash, and I do want to take advantage, even if it's slightly to the upside. We didn't really see that, however, with VYM, but again, really good downside protection. So I'm flipping $5,000 out of it. That's what I did this week, and I dumped it into Google. I'm going to continue to buy Google, but what I'm going to do is take the rest of this VYM position over the next couple of weeks and cost average into the VOO and the Google for now. I've been looking at things like TQQ, but I haven't pulled the position on that just yet because I am looking at crypto for my higher growth rates and taking a look at the crypto accounts outside of the corporation here, folks. Currently, I own about 12.5% of a Bitcoin, or 12,530,226 Satoshis. But taking a look, that account's worth about $3,846, and I am continuing to cost average into Bitcoin here. Taking a look at my purchases for this month, I try to add about $500 a month. So I just did a purchase actually today of $200, $75 in the midst of July, another $30. That was probably from an affiliate. I bought another $100 July 7th. I dumped another $150 in just going into the beginning of July. So I'm going to continue to do this until I rebuild this up to about a $4,000 or $5,000 position, which I should remind you, if you're Canadian and you want free Bitcoin, this account is phenomenal. Shakepay is the largest crypto exchange in Canada, and they do this thing called Shake Stats, where you log into the app, shake your phone every day, and they give you free Bitcoin without depositing any money. So if you sign up, you have to come in through an affiliate. The link is below. And then if you want to go beyond the free Bitcoin, which is already amazing because you can see every day they keep giving me free Bitcoin, you can obviously deposit $100. You make 30, I make 30. That's an immediate 30% return for you plus the free Bitcoin, and it's just a la-di-da. And I love them because they tell you to take your crypto off the exchange. They're all about wallet and preservation. So I give Shakepay a lot of faith that they're going to survive this, doing better than Coinbase and these other crap exchanges. I love being Canadian for some specific things. But on that note, folks, pass the question off to you. I'd love to know what you think about all of this in that comment section below. But stay cool, stay awesome, and as always, I look forward to catching you in the next one.